Boom. All right. So you know if we're recording, it's because we gonna plan to drop that. But what I said earlier, I'm looking to move our contents, guys, um over to what you call it, to WAP, and more of like that simple. They have a simpler platform where I can just put all the videos and kind of separate them. I can put videos specifically around market structure on in one little folder and things like that, inducements, just making it more organized for you guys versus going to all the videos on YouTube trying to find which one focused on what and whatnot. Anyways, let's just dive into it, right? So I won't go over the entire market. I don't want to make this a market structure breakdown or nothing like that. I want you guys to just see it as more so a quick little breakdown of what just happened today, yesterday, that big move. I don't know if anybody saw this madness on my story on Instagram. I know a lot of people messaged me when they saw all those trades, which is interesting enough. I was speaking to someone about it, and I was speaking to Manny about it too. And I said, you cannot trade what you really know under the system of a prop firm. It's just the truth. That's just the reality of it. A prop firm is like having a parent. You're gonna always have to stop what you're doing because my parents say so. You believe in the move, you won't be able to hold the drawdown even if your account balance is big enough to hold so, simply because you're gonna think, I don't want something to happen and I lose more than 3% in a day and I lose my account. You can't do that with a prop, which is not a bad thing. For people who are undisciplined, it's a good thing. But those who are disciplined who can take care of that without a problem, you can do that on a live account, and I talk about that all the time. Sometimes when I made that post, when I'm very confident about something, I will hold the trade and stomach the drawdown. And I'll quickly just show just the reason why I did that yesterday. I was just looking from 4 hours. When I had said earlier that I have a monitor in my room that I never take off the chart, and this is this big one here, and it only stays on a 4 hour. I don't change it from no time frame. So I'm always aware of what the higher time frame did. So without doing any breakdown, we could see that this was the last swing low that led to this up here swing high. And right, it didn't break a body, but it did inducement. But all of these internal ones here, it broke a body above them. And not only did it do it once when it got to here, but it did it again once it came back here and went up here. It did it twice. So the first level here already gave its reaction. Price came up here, couldn't break above. Now price finally reaches this level, which is the last low. But it didn't just come to that level and mitigate. It came to that level and did a medium inducement at the key time window, well, not key time, but at the end of the session, which was during Asia, it did that to trigger that bullish move. So this is a daily, by the way. On a 4 hour, you can't tell that it is, but it's a daily demand. So if you go to the daily, you can see this is a daily low that led to this swing and it caused this break of a daily. How do I not expect a reaction from here? So the minute this happened, I know that even if this doesn't lead to all the way up here, I'm not looking for that. I know for the most part, it's gonna have to come to this. So from the day this happened, I know that I'm only looking for buys all the way up to this because this level has to give me some sort of a reaction. So in moments where I'm in a 1 hour session or a 15-minute zone, for example, coming into the session on Monday, right? When price reached this level here, this happened during London. I'm taking this buy here in London, or actually it began for me here, but the first position was taken here. I took this buy here in London, right? Coming into New York from London is what I mean. That was the first buy from this demand here. There was a demand right here. So when I took the second entry, which was right here the other day, I was telling Manny when I was on the chart with him, I start doing these things. It's called this channel. You guys might see me do this a lot where I mark these channels. The reason I don't talk too much about the channels in our calls is because I understand that we all study from the same source, right? We study NYU. But what happens is as you take what you learn and you apply what you are learning, you are going to have experiences and you're going to gather data that we don't speak about in YU, but for your eyes, your perspective, you're picking up on this. I've picked up too many things from just channels, even though channels are a retail, not a retail, I'm sorry, it's a retail strategy, a retail term. channels, prices in a channel, etc. It's nothing different than price basically consolidating. It's just doing it in an angle. So if I understand it that way, and I understand in a consolidation when the market is like this, for example, this right here, this is a consolidation, right? This is no difference than this channel that's consolidating right here. It's just doing it diagonally. So in a range like that, we know what? When one side gets taken, the other side needs to be taken. So I told Manny, I said, all I'm waiting for is to see price. At that time it was here. I said, I wanted to just see price, break out of the channel and mitigate this level. At first, I had a demand here. I said, I want to see it either come off of this demand. I don't know why my computer's tripping. Let me fix that. It's not the demand. I said, this demand here, which was underneath this low. I said, if price can take all of this build up, induce it low, mitigate here, and push out, I'll buy up to come to fulfill the rest. Because right here, we're only at 50%. 618 is up here. So I'm anticipating that. This bias originated from what? That daily demand I just showed you that price came from. So you don't have to visit the daily and the monthly all the time or even the weekly. Sometimes a quick glance of remembering where you're at or what you're approaching can confirm your bias for the whole week. So the whole week I knew this is where my final destination was because this only reached 50% when we got here. So when I entered the buy from here during London session, because I was on a call with some of you guys who joined that London session, Price gave me my first 1 to 3, which I posted on IG that time, which was the buy that I took from here. Price had reached my 1 to 3. But then the market didn't fulfill the Asia high that I wanted to target. Instead, it pushed back down. So what happened? I had two options. Close the trade and let it hit break even, or hold the trade and know that there's another level to the downside that price can still mitigate, which when I went to the 15-minute, I knew that we had this 15-minute level here. So I said, okay, from right here to right here, it's about 23 pips. And I did the math. How much would I be in drawdown? Can I stomach that? Because remember, I'm trading with real money. So at the end of the day, if I lose it, it's my own actual money anyways. So am I willing to? But the money that I put in this account, mentally, I've already assumed that it's lost. Every risk is just, let's see if it works. Let's see. So when you're not able to have that type of perspective in the same way when it comes to prop firms. So I wanted some of you guys to understand that when you see me do something like that, don't adopt the concept and think that this is something you should just go and do. And it's systematic. I have reasons and data behind it. My data and reason behind it is because I understand my data from channels. I understand that I know that once price dips on breaks out of one side of the channel, it doesn't have to take the entire channel, by the way. It could have left from here. I've seen it happen all the time where price come halfway through the channel and then push out. Or it could come to the lowest point, the extreme side of the channel. This was the decisional, this was my extreme. So me knowing that and the amount my drawdown was for, I accepted it. And what happened after hours? I slingshot with the market and it fulfilled my move. So I stuck to the bias. So as for today, all that happened is that we were in a consolidative range. The only opportunity you had happened at 9 a.m. Actually, you had two, because the second one, I saw it and I didn't enter it, which was this one here when price came back for the retest, because it gave you the higher time frame two-leg protocol. So let's just jump into that one for today. This happened yesterday. We know this crazy push happened yesterday. Where did it reach? It reached exactly at the 618. And let me know if it's moving too fast or if I'm speaking too fast, by the way, guys. And if you have questions, just turn on your mic and feel free to interrupt. So when price shot up here, here's the first confusion for some might have seen. If you was on a 1 hour, for example, you would notice that there was no body close. It was wick. Price right here closed the body, but from the full range, it was wick. But if you were able to see that the body was closed slightly here, even though we did the mitigation, you'd know that this is not a ready zone. Yes, we need to do a retracement. We're not at 50% yet. The market came, gave you two legs to the downside, stopped right here. This is on a 1 hour. 15 minutes, it looks a lot better. You can see internal highs, internal low, internal high. Let me use the highlighter tool. Internal high, internal low, higher high. You can see that we're still in this range right here. So the market has not broken any of that. Instead, you see that it starts consolidating inside of this range, basically, which on the 15-minute, if you put a box around it, you could see where price started the consolidation. So I went down to the lower time frame, 5 minutes. So I already know I have a bullish BOS from the 1 hour and 15 minute, which was this low that shot up here and broke above this last swing high that led to that low. So I know I'm still bullish. Well, we're still bullish. The only thing is we need to fulfill a retracement. So next question might be, well, why wasn't I looking for a sell to come to the 50%? Well, because price hadn't confirmed it yet. For me to know that was going to be a sell, I would need to see a break of this low to confirm that sell for me, a break of this low. Because once price would have broken this low, I would have just wait for the retracement and then look to sell again to the downside to the to the discount level. But that's not what happened. Price didn't come and tap into the 50% to give us that. Give me a second. Yes, so price didn't come and give us that. So instead, what it did, it came to this 5 minute demand. You look on the internal now, you can see that this low was a low that led to a high that broke above these levels and this Asia high level as well. It didn't break a body above this swing high. So a lot of people could have gotten confused or questioned the trade, questioned the buy because of this high. You would say, well, this high, which is the swing high that led to this low, price didn't come and break above. Instead, price induced it. So you're probably thinking, well, this level needs to fail because price didn't close a body above here, which isn't an invalid situation. But because price broke a body above this level, if anything, price has to still come give a reaction from here and give you some sort of a liquidity sweep. In this case, our only form of liquidity was what was being built here. Consolidation range right here, trend line right here. These were your levels of liquidity being built to take. So when I go to my 5 minutes and I see that this demand is resting here, which you see this 5 minute price comes in. The minute the mitigation happened, this is before our key time window. On the 1 minute, what the market shows me or showed me was this here, two-leg protocol. This is something that we talked about often. Oops, what is this doing? This is something we talk about often, guys, with the two-leg protocol entry. From this trend line, another thing I want to say, I do not count this as the first tap. That's just me. This to me is not tap one. This is where the trend line started. That's not tap one. So when you see this, and then you see this, and you're already saying, oh, this is two tap. Now it has to all of a sudden come take it because the third tap. That's not true. That's not even, this is the first tap. This is where it started from. That's not tap one. This is where we began the trend line. The first tap, one tap. Then we need a second tap. And then on the third tap, we can anticipate the break. You can start paying attention to that on a lot of trend lines. When you started avoiding the first one as being your first tap, you will see that that's not the true tap. What happened? This is one tap. This barely tapped. You could say two. After the third, look what happened the next time price came. It consolidated to go through it. It won't be one tap, two tap, three tap, four tap. That's not the case. I've seen it for too many trend lines where it looks like I don't count the first one. I've always seen is the what would have been the fourth tap is actually the third tap, and that's when price takes the level. So just a little rant that came to mind. But here we are, back to the zone. So once price mitigated the zone right here the first time, it gave you a fake two leg to trap traders in. Didn't catch anyone. Anybody who would have taken it right here, they got induced out. Then the real inducement happened. Price gave you one leg, retracement, fell to break the low, pushed out again, change of character, and this was your 1 minute entry zone. Right? Let me pull it here. This was our 1 minute entry zone right here. You see the one leg from this low to this high. Price retrace, did not break underneath this level, pushed above, close a body above this level. That's enough to know that this level right here can be respected. You take this position. This was your first entry. This was the earliest entry of this trade. If you was in the session early enough, you could have caught that, right? But let's say you missed it. or you just needed to be more conservative to make sure that this was not a trap like this first one was. I'm not sure price got me the first time. I don't want it to give me the second time, so you waited. That's fine. So what'd you get instead? The same kind of a setup. You get now change of character, break of structure. This is the other strategy that we've learned how to enter the market on. Now the price reach here, which is a level of supply, it reached here, and you see it just consolidated a little bit on that level. Anytime you see price consolidate around your zone, the zone is going to fail. So price came in there, consolidated a bit, and then it pushed out. Where did it reach? This level. What is this level? Retail. You have consolidation already here. You have equal highs of these two range. Now I gave you a third equal high. So when you see prices coming back down and you still have this demand here that you was waiting for price to come to because it didn't come there the first time, when you see that and you see you have all this liquidity that has not been taken above here, and you also see that you have this trend line of liquidity generated here, the three taps has already been done, and then price is coming back to here. Yes, we know that there's a trend line here that needs to be taken. Yes, we understand that we need to come field 50% level. But what is the session of the day? What is this move telling us in that moment is the question that I asked myself. And what I saw is that buyers are still in control. We haven't broken any level. We haven't broken any level, guys, that shows that sellers has taken control back. Since this long push here, since this long push here, guys, this long push here, this is a lot of liquidity left here. Of course, we're gonna have to come take this liquidity. There's no way the market is just gonna have this bullish push like this and continue bullish again and not come back for it. It's going to come back, especially because since that trade right here we reached yesterday, we haven't even taken that high. So we know that price has to come to at least a 50% or a discount level before we look for this continuation. Why? Because we broke structure here. Now, we're also inside of the premium level of this move. So why would we not expect that this move to give us a reaction to come this low? This is why you go back to higher time frame. That's why I say I keep this monitor on higher time frame at all time, right? Because at this point, if I'm on 4 hour, let me quickly clean this up. If I'm on the 4 hour, guys, I could see it already. Look, 4 hour. What does the 4 hour look like? Price has not reached this high time frame supply. Even though this is a premium level, it's just two bearish candles. There's a lot of liquidity left in this wick, and there's more liquidity left in this big candle. And then what is this right here? We had consolidated. We see that price wick above, came back, and it took the low. So anytime price has broken out of both sides of a consolidation range, it always come back to the mid level of the consolidation and then give you the reaction for the next move. Only when it's taken both sides. If it hasn't taken both sides, you're not going to get that. It's going to obviously come take the other side. But here's the problem. We now have a trend line with this, with two taps. By the time price returns to this level, we're going to have what? The third tap. Just like I told you, when you don't count this as one, what does it become? One tap, two tap, and now you're about to approach your third tap. That could potentially give a fake and then push through to take here. Well, why would we want to come take this level anyways? Then you can see we have this consolidation level here where the high of it hasn't been taken yet. This range right here, the high of it hasn't been taken yet. So this is just reading a 4 hour perspective. Then you're looking what happened above here. Then you can see all of the narrative as to why price can give you a reaction from a daily demand. Remember, on daily time frames and 4 hour time frame, you don't have what's called invalidation model. That doesn't apply there. Price can go to a supply on a 4 hour or daily, react, come to a demand, react again, and continue doing all of that. There's no such thing as invalidation model. So let me quickly refresh this. Okay, so with that being said, yes, I have this high. Oh, where it is on a 4 hour. I have this high that led to this low that broke underneath this level. So I'm expecting price to come somewhere here before I get any type of reaction. I'm not looking up to here yet. I'm not anticipating this yet. Not yet. Decisional, extreme. If price comes up to this level, and comes back and comes down here again and only induce here and mitigate here again and does this, now I can expect that this is gonna fail and then I'm coming for here. So if price comes to this level, does a retracement, because mind you, if this is a smart money trap, if this level right here is a smart money trap, then it has to come sweep liquidity. And the next liquidity would be where it came from. So it would come here and induce. But if it comes and it breaks a body, then we know we're into what? Retrace and then continue again, right? So that's one of the possible narratives. So this session, I didn't really want to go too much into charts. I really wanted to spend it and watch a quick 20 minutes of our call with Alex. There's a perspective that I want you guys to pick up on. Let me see. Hopefully, it shares my screen. There's a perspective of the market I want to kind of work with you guys on, and like reading. It helped me a lot. That's the reason why I say I want to work with you guys on it, is because this video helps me a lot. This is one of those videos that I continue to watch over and over. I'm obsessed with it, and I think it will help you guys. Even if we only watch 15 minutes of it, helps you a lot. And that's day 2 of this, where Alex breaks down the first part, which is simply how to identify, um, as you can see, I was already in it, how to identify the pro trend direction and condition. Can you guys, I don't think you guys can hear it. I don't know if it shares audio. Probably not. Yeah, I don't think you guys will be able to hear it. So I say this, anyone, yes, I'm glad you love that one. I'm glad you love it. Anyone who has this boot camp, I want you to watch this with Alex, right? But do not watch the second phase yet. Focus on this part where he talks about the pro trend. Focus on the pro trend. Don't jump to the second part yet where he talks about the counter trend, which I believe is around the second half. All right, about where is it? Counter trend, yeah. Don't go into counter trends yet. Spend a week. I promise you, this will help you. Spend 1 week of the same video over and over, watching just the pro trend. You will no longer look at the market the same about this change of character, breakup structure. These will just be additional information for you. The minute you understand the concept of which he explains beautifully, the session, how it opens, you will stop worrying about medium inducements. You won't question what's valid and what's invalid. You will start seeing medium inducements as a simple tool of, this is just a gas. The market just fueling liquid gas. What is it going to do with it? Is it going to just go get liquidity, or is it going to break structures? All of these things going to come. Um, this call specifically, I want to save another call for us probably on a weekend, where it could be one of those 1 to 2 hour calls we used to have, where I really just go on a rant, talk about so many of the different things that I've picked up from trading and perspectives. I want to do that on another call probably this weekend. So hopefully we're available. If not Saturday, if we don't have a call with Saleh, then Sunday I'll do it for us again, because there's a lot more details that I want to go over that I've just been soaking up in this little space, and I want to share it with you all because I think it'll help your trading a lot. So just to dive into the announcement aspect, I am going to be moving our community's chats. Of course, anytime you may. I'm going to be moving our community, not chat, I'm sorry, contents over to the WAP platform. So soon I will launch that, right? Now, there's a few different things too. Some of you guys, like I've said this all the time, you don't have technical problems. You guys understand what you're reading all the time. Majority, if not all of you. There's only a few new people here who are still picking it up, and some of the new ones too. You guys already messaging me saying how much you already picked up in understanding the market. So for those of you who don't have technical problems, you don't have this isn't for you. This is what I'm going to say. I'm saying isn't for you. This what I'm going to say is more so for those who are having technical problems. Those who says, Sauce, I'm seeing all of your free contents. I'm seeing the video of YU. I'm watching them. I'm studying. I'm back testing. I'm just not getting it. And we're almost out of time for this call. I think it's about 10 minutes, but it won't be much longer. And then I'll do another one for Q&A if anyone has. That way we can talk about it. But the question may be, I'm seeing all of this stuff, but I'm still not getting it. At that point, you're obviously asking me for more of my time and more additionally. I want to create a separate community, not community as in a whole new channel, but just a separate chat just for those individual people. A lot of them are coming from my IG and a lot of them are coming from YouTube as well, who are some of them who are not in this community. Um, those are the people that I'm creating it for. But I also want you guys here who feel that maybe you need that to have the option. I'm only doing 4 person per category, right? I'm gonna have a standard category for them where it's basic. It's just like what we have in our community here. They have the ability to get on Zoom calls, have calls with myself, join a trading session, if I do a free live session, something like that. But then there's going to be another tier for people who looking for all of that as well as live Zoom call. They just want to trade with me hands on or trade hands on, be on the live session, ask questions live, trade live, and all of the additional things. And this is not a breakdown of the whole idea of where I'm going with this. When I do launch it, those of you who are in this community, you'll see it. Just know that you have the option. And then the last one is just going to be for someone who just wants full hands on. They want to be able to get on one-on-one calls. A lot of you guys ask me for those one-on-one calls, but it's time consuming when I'm over here trying to also do these things. They want one-on-one calls, and I want to be able to provide those for those individuals. So that's why I'm limiting it to 4 people. It's only one of me. I'm not gonna be here and say because I'm not doing it for the bread. So I'm not looking to say, oh, I need 400. I'm only doing 4 person, 4 person on the basic category, 4 person in the middle tier, and 4 person on the higher tier. 4 person because then it's easier for me to focus on 4 people and help develop them intensively versus 150 people, 200 people. I won't be able to give you the quality that you deserve of your time. Someone said, how much is it? I'll put it together. I haven't gone to all the final numbers of what it is, but it's not going to be nothing expensive. It's going to be like, we're talking about cheap stuff, 9.99. Like, we're not trying to break nobody's pockets on nothing like this. Okay. I just wanted people to feel supported and have that if they want it because it's not something that's needed. This is for the people who needs those extra time. Other than that, I will continue to do my free content, continue to put out gems. I will continue to put it out. For some people, just watching it is not enough. They need you there with them 24/7, holding them accountable, telling them what to do, giving them that psychology background, etc. Those are the people it's for. Okay. So if that's not you, don't worry. So I go back to say, all of you guys in the community, for the most part, to me, don't need technical help. Y'all just need psychological help. And I know a lot of it comes from the boundaries of the system we trade in, which is prop firms. Getting payout is good, but regardless, it's a system that doesn't allow you to be free. Trading is a very free sport, right? It's a lot of discipline, but you also have to be creative. You have to see creative things happening in the market. You have to be able to be flexible. If I'm not flexible to say I didn't take the trade with no stop loss. I didn't take the trade and use a 30 pip stop loss. I was just willing to say, I know this move is gonna happen. I'm gonna turn off my stop loss. I turned it off because if I invest into Tesla right now, let's think logically for a second. If you invest into a stock right now, Tesla, and it's worth $205, and then Tesla drops to $198, your $1,000 investment is no longer 1,000. Just because Tesla did that slight drop, are you gonna sell off your Tesla shares and lose the money that you just sold in Tesla just because Tesla took a dip? No, you're gonna still hold on to your investment of Tesla and wait till Tesla makes another push again and add more money as it comes lower. So why would I have a different perspective if I'm reading so much of this higher time frame? I know where it's gonna happen on a higher time frame, but when I go on a lower time frame at the level, I'm just too early. If I'm extremely early from the decisional or extreme level of the higher time frame where the market is gonna go, by all means, I understand that. But look where I'm at in this one. This is oops, where we're at on here. This is not the decisional or this is not the decisional. This is the extreme of the last push. This is the last point of demand that can make this push up again. I'm not right here at this level. We have already passed there. So in a situation like this, I know that if price was to go past this level, then I would have closed it. I would have accepted my loss of whatever amount that would have been right here because I know from here, I'm not going to hold it all the way to come here to then look for the buy. It makes no sense because now we have a body close. This would only just come here to come do this again. I wouldn't, it would be unrealistic. So I say that to say you have to be creative with the information you know. If you're restricted from being creative to trade as a form of freedom, to think outside of the box, you're not going to always capture it in moments where it's there for you because you want to respect that rule. So I don't want to go on a rant about that. One day, maybe I'll implement some of these things that I'm doing to show you guys because I started growing this live account with like 500. I already got it almost to 1,000 after yesterday within just a week of trading. And this is live account I did it on, and it's because I've been creative with it. Just didn't care, you know. So I said that let's jump into a Q&A, and then we'll continue the rest of the Q&A on the next video. As we got 4 minutes left on this one. Actually, let's just do it on the next one because 3 minutes is not enough. But thank you guys for the few time for the moment on this conversation, just to kind of share with you guys some of what's going on, some of the transitioning. I know also I haven't been actively sharing all my trades on the charts with you guys on a daily basis. I did go a couple weeks before this month where I wasn't trading often when I came back this month. But I'm doing better now. I'm doing better with creating the content. I'm trying to give you guys a post of my analysis in the as a form of video because I feel like the picture doesn't do justice because and then it's too much to text in the picture. It just gives me anxiety seeing all of that. So I'd rather do a video where I can give you guys some details. So in the mornings on weekdays, if you have me on Insta, if you want to kind of see, get a perspective of what you have or cross-reference it from yours, I'll try to make a post on every session before I trade, whether I enter or don't. So that way you guys can kind of see if you're reading similar or if you're reading opposite. You don't have to always read together. You can have a different perspective. So I want to do that. And man, I should have put this on a notepad, the things that I wanted to discuss with you guys. Oh, I want to do a little challenge. That's what I wanted to do, right? I wanted to do something for the community. I wanted to do a challenge where um we do something. I'm gonna put it together. But whatever the challenge is, the winner of it, I want to do one of two things. Either I fund them a 10K prop firm. I don't mind. I'll grab them a 10K prop firm with Alpha Capital, or I do the same for a funded account. So the same cost of a funded prop firm or of a same cost of a funded account. Either way, that's because of how much I want you guys to step into the live account thing. If you already trade live, then you know what I'm talking about. If you don't trade live, you probably hear me talking. You're like, is it that deep? Is it that serious? I promise you, it is that serious. You stop valuing money until this thing about to end in 1 minute. I'm just gonna say this. Those trades that you just saw me do, where I literally had all of those stacked up trades, I was literally turning pennies to dollars. Some of those trades were 34 cents that turned into $9. That's how much R I caught because I kept adding more and more the deeper the drawdown went. I had a trade that was 97 cents that turned to $18. 97 cents. The deep so that moment, that light bulb doesn't happen until you experiment. That's what I was doing. I was just experimenting. And then it made me realize all I have to do is add an extra zero. All you have to do is add extra zero behind each of these numbers. Obviously, that comes with the balance of your account size, right? If you can sustain an extra zero behind each of these numbers, each of those 3, 4, 5, 6, 7, 8, $9 that was floating, that could have been easily been 90, 80, 67, or 900, 900, 800, 600, easily. You have to have foresight. You have to be able to see that this could be for you too. I want you guys to start leaning towards live accounts as soon as possible. You don't have to trade every day. At least have one, small one, $50, $20, $100. Have something so that it can make you feel like you're putting some skin in the game. I promise you, it's not to make you feel like everything you're doing is worth your time versus the prop firm that's making you feel like it's taking you forever to get there and is making you guys question whether you know how to trade just because you haven't seen the result you're looking for. But that's not true. You're just following their rules. That's why you're not fully getting it. And by the time you have a run, it's only applying towards you trying to bring the account back, not you actually seeing the money coming to yourself. It's a difference.